Good morning, everyone, and welcome back to my channel. Let's talk business once again. And as always, I'm really excited and happy to have you here to discuss latest happening in the insurance. As you know, we are discussing about Brexit and its impact on UK insurance market. In this episode, we are going to discuss specifically about Brexit and its impacts on Lloyd's of London, and we are also going to see how Lloyd's is going to manage the changes related to Brexit. We are also going to see what is Lloyd's Brussels subsidiary and what role this Lloyd's Brussels subsidiary is going to play within the Brexit regime. So, a lot to discuss and a lot to understand. Let's begin. This is the part 2 of our series. In part 1, we have discussed the Brexit in its common or general sense, where we discuss about what is Brexit and what was the referendum all about and the issues from the Brexit, including the geopolitical issues. And we also touch upon briefly about the Brexit impact on UK insurance market. In this series, we are going to discuss, as said earlier, Brexit and Lloyd's of London, and specifically we are going to discuss about how Lloyd's Brussels subsidiary is playing role here in this Brexit era. We will also discuss about the operational impact, where we will discuss open market placement processes, open market claim processes. Maybe we will discuss about the delegate authorities, account and settlement and reporting from the Brexit point of view. And or maybe we can say that how all these things fit into the Lloyd's Brussels subsidiary. For those who are new to my channel, my name is Ravi. I'm having more than 14-15 years of experience as a business analyst, and I am currently practicing in Lloyd's of London. I'm largely associated with P&C and general insurance domain. If you have any query related to this session or my previous session, you can drop me email at ravi.s.sharma@hotmail.com, or you can also connect me on my LinkedIn profile. Once again, thanks a lot for all your emails. I have replied a couple of emails related to previous sessions. I got a few more in my inbox. I will reply all of them. Thank you, and let's see what we have in stock for today's discussion. So let's have a quick introduction and recap once again. The following the United Kingdom Brexit referendum, the country will leave the European Union on 31st October 2019. As many of you know that Mr. Johnson become the new Prime Minister, UK Prime Minister, and he is trying to get or secure some sort of deal from European Union before exiting. But the likelihood of departure without a deal has gone up. And the reason is Ms. May's three failures to get the deal through the House of Commons. And as you can see over here, currently, the European Union got a strong reply to Mr. Johnson stating that either they opt for no deal Brexit or they cancel the departure, but they must choose their option before 31st of October. Now, what does it mean of no deal Brexit? Well, in case of no deal Brexit, the first impact is on passporting rights. The UK insurer and intermediary will no longer able to passport their UK authorization across Europe, and vice versa. Means the European insurer will no longer able to passport their rights in UK, which means that the freedom of services and the freedom of establishment. From the insurance point of view, the UK insurer and reinsurer may therefore unable to cover the risk to or pay claim, including policies underwritten before Brexit, and will subjected to third country regime applying insurance authorization in each EU member state. So this is the problem. Now, the European insurer and intermediary could be committing criminal offences if they continue to operate in UK without having entered into the UK temporary permission regime (TPR) or financial service contract regime (FSCR). We will discuss about the TPR and FSCR going forward. but they must get into some sort of scheme and before operating into the London insurance market. Or now let's have a few situation over here for the EU insurer in UK. For those wishing to enter into new business including renewal can use TPR. Those that have notified UK regulators of their intention to use the scheme or who have already applied for UK authorization will deemed to authorize for a limited period to allow them to become fully authorized. Now, for UK insurer in EU, what the EU leadership did in order to manage the impact of Brexit, and they really wanted to minimize the impact of Brexit to the ultimate policyholders. Certain European countries have introduced regime for UK insurer to continue to operate on a temporary basis or run off pre-exit contract. However, these regimes vary between member states, as do third country rules that will apply if there is no temporary regime put in place. The impact of no deal needs to be considered on case by case basis for each UK insurer, depending on whether it's operates in Europe, the product it provides, and the customer profile what it manages. So now let's talk about Lloyd's of London and Brexit specifically. So in the event that the UK leave the European Union before 31st of October, then with no transition or implementation period, the Lloyd's underwriter will continue to honor their contractual commitments, including the payment of valid claims to all the policyholder in EEA regions. The Lloyds expect that this will have the support of all European regulator as it goes to the heart of treating customer fairly. In the event that it does not, the Lloyd will direct its underwriter or take a step to ensure that the contractual commitments are met in full while the transfer is being completed. Lloyd's approach has full support from UK Financial Conduct Authority (FCA). The Lloyd's and then the heart of the entire thing, the practice what Lloyd's is going to follow after the Brexit is to treat customer fairly. So the Lloyd's will continue to provide the innovative solution after the Brexit for EEA client and the global client that have EEA exposure with their insurance portfolio. Now, from the EEA point of view, just a quick point: the EEA include the EU countries, Iceland, Liechtenstein, Norway, and it allows them to be a part of European single market. Switzerland is neither EU nor EEA member but is a part of single market. It means that the Swiss nation have the same right to live and work in UK as other EEA member. The Lloyd's is working on transferring all the European Economic Area business to its Lloyd's Brussels subsidiary. We will discuss about Lloyd's Brussels subsidiary shortly in detail. The Lloyd's Brussels, or the formal name of the Lloyd's Brussels is London Insurance Company SA, is a subsidiary of Lloyd's with 19 European branches working with over 400 cover holders and 40 Lloyd's broker spread across Europe. So this is the cutting from their website, Lloyd's Brussels website. You can visit their website, a very interesting website to see. So basically, Lloyd's Brussels subsidiary was set up to ensure that the customer and partners in the EA continue to have access to the Lloyd's world-class services and expertise, while also facilitating continued growth and further digital transformation. The company is established and operational with the executive committee and board and 50 staff based in Belgian capital, which is Brussels, as well as 45 other across the continent. The corporation announced that the Lloyd's underwriter will continue to pay all valid claims regardless of the result of Brexit negotiations, and that it will moving all legacy EEA business to Lloyd's Brussels before the end of 2020 via a Part 7 transfer. Now, what is Part 7 transfer? A Part 7 transfer is a court-sanctioned legal transfer of some or all the policies of one company to another. It's governed by Part 7 of Financial Service and Market Act 2000 FSMA in UK. So here is the structure of Lloyd's Brussels subsidiary. As I said earlier, the Lloyd's Brussels subsidiary is 100% owned by the corporation, the Lloyd's Corporation. And while setting up the Brussels subsidiary, the corporation injected the capital to set up this subsidiary. The subsidiary will reinsure their business to syndicate by outsourcing contract. We will discuss it later. The Brussels subsidiary got its branches and UK branches also set up, and the managing agent will going to give business to the Lloyd's Brussels subsidiary for all EEA clients and for all clients who got a EEA in their portfolios, and the business will be procured by the broker. And so the Lloyd's Brussels subsidiary will enter into the outsourcing agreement with the managing agents, allowing them to underwrite on behalf of Brussels subsidiary. In this capacity, the managing agent will be outsource its underwriting services to the Lloyd's Brussels subsidiary, right? So they will be achieving the entire underwriting process through an outsourcing agreement between the Lloyd's Brussels subsidiary and the managing agent. The Lloyd's Brussels subsidiary authorized managing agent to appoint cover holder and service company on its behalf. The broker will undertake negotiations of cover holder appointment or CAA between the managing agent underwriters and cover holder, thus allowing the current relationship between the entities to continue. The only visible change between the original binder, new CA, will be the underwriting entity, which will be now as Lloyd's Brussels subsidiary instead of managing agent, because now the managing agent has outsourced their capacity to underwrite business to LBS. Under the terms of outsourcing agreement, business will reinsure back to syndicate, which means that all insurance policies issued by LBS will be reinsured by the Lloyd's underwriter in London, acting as the outsourced cover holder, enabling policyholder to continue to benefit from Lloyd's unparalleled chain of security. LBS will able to write risk for all EEA country and the UK. So let's see what are the situation where the customer is getting impacted and where the customer is not getting impacted. So let's see what will not change for the client point of view. While the policy will be 100% underwritten by LBS for the Lloyd share, in order to maintain the current underwriting expertise, the actual negotiation and underwriting agreement and claim decision will be performed by the same Lloyd's underwriter as they are today. This will make placing the EA business in London largely unaffected, as it will continue to be actioned within the current brokered market using the same distribution network as today. The current operational facility for financial payments, including claim and premium and claim agreement, have been replicated as far as possible to maintain the present Lloyd's approach, the present Lloyd STFO approach. Let's see what will not change from the client point of view. As we know now, the LBS will establish a UK branch which will require the authorization from the PRA in UK. Whether there is a policy with 100% of exposure within the EEA, the risk which would currently be underwritten by Lloyd's Syndicate will now be underwritten by LBS. However, the actual physical agreement of the risk will be by the relevant underwriter or underwriters acting in their capacity as an outsourced provider of an underwriting service to LBS, with each managing agent having their own Lloyd's insurance company stamp for this purpose. Now let's go ahead and see what are the various key functions within the LBS. So first thing first, the Lloyd's Brussels subsidiary will maintain the subscription model and current market principle, retaining underwriting capabilities and the security of Lloyd's market behind policy. So the second point is about the maintain the current distribution network, which means that the business relationship with broker and cover holder will remain same. They will also try to minimize the changes in existing business processes and system. The support to continue trading under the Lloyd's brand and benefit from Lloyd's robust financial rating. And the LBS will ensure the future growth in Europe from the UK point of view. It will continuously provide their unparalleled services to all EEA and European Union members. So let's see what is the LBS operating model. So the business will flow via the existing distribution network. The managing agent, cover holder, survey company will write EEA business on behalf of the Lloyd's Brussels subsidiary. The Brussels subsidiary will require managing agent to use SDC, structured data capture, and data submission, access and transformation service, which is DA as a data distribution or submission channel. If you don't know about SDC and DA you can go back to my previous presentations where I have explained in detail what is SDC and DA. The Brussels subsidiary will capture contract level data required for operational process, reporting and oversight requirement. The Brussels subsidiary will largely outsource the placement and administration of risk to managing agent, subjected to regulatory approvals, but will have its own operational function to carry out critical administrative activities of an insurance organization. This team will oversee placement, claims, endorsement handling processes, credit control, technical and non-technical query handling. Claim handling will be outsourced and performed by the managing agent, cover holder, service company via the existing process and system. The query generated by the Brussels subsidiaries data and business validation will be resolved by the managing agent. The current settlement process provided by Lloyd Settlement and Trust Fund (STFO) will be leveraged for the collection and settlement of the premium and claims. The risks are automatically reinsured to the syndicate, less reinsurance commission and premium and taxes over here. So we will discuss about the entire process in detail in our forthcoming session. This is just an overview. Well, this is just an overview where we just wanted to show you how the existing LBS operational model look like. And we will continue to discuss about each and every aspect of LBS from the different angle. So that's all from this overview session. Thanks a lot for your time, and I hope you have enjoyed and learned from this session. We'll have a session where we are going to discuss in detail what are the various impact of Brexit on the business processes, including the pre-placement and the post-placement services. Thank you and have a nice day ahead. Bye bye.